Hi, I'm Jack, and welcome to the Attract Capital webinar series. Today I'm here with Attract Capital CEO and founder, David Barnett.
Hello, everybody.
Today, our webinar's title is Deal Structuring for Closing Success. So Dave, given the market reality, how important is it to structure your deal properly?
It's absolutely vital in today's market, given the cautiousness that exists in the banks and the lender community, Jack. There's certain deals that just can't be funded in today's environment. And acquisitions and buyouts are still happening, but your deal's got to be extremely well structured in order to make that happen.
So what are the key concerns lenders have in today's market?
I think lenders are worried about when they're talking to a borrower, is the borrower telling me everything or is there anything they're not telling me? That's sort of always a risk with a chief credit officer, and it's heightened during stressful economic times. I think they're also concerned about operating fundamentals and how well the company will do over the next couple of years, because there was a lot of excessive demand during the pandemic over the last couple of years, which might have artificially inflated the revenue of a company. They're also looking at the financial strength of the independent buyers, just to make sure that they have the money to continue to support the asset in the future if there's a need for a capital call. And a lot of them are just concerned about the timing of the decision. If you're a seller in this market, why would you sell right now? Again, back to, what does the seller know that I don't know? So all these things kind of, become heightened risks in the mind of the lender during these times.
And how do you ensure that your deal is structured properly to get it to closing?
So I think it's a matter of almost taking a step back, Jack, and saying, what deal do we want to do? And I think deals that are expanding a company, a growth financing, such as acquisition, such as a working capital expansion, such as you're expanding capacity. Growth financings or acquisition financings are very positive deals because the money's not leaving the company. So if you're looking to put money in your pocket as an owner right now, it's a little bit of a tougher time to do that right now. If you're looking to do a leveraged dividend, it's almost impossible to do it right now. But deals that are building the size and the scale of the company are still very much in vogue. And buyouts for companies that have been performing well, but you just can't expect to get 100% of the cash out of a buyout. You have to leave a little bit in so the lender is comfortable. You also want to make sure that you are not leaning on your debt to do the heavy lifting. You want to bring a little bit more equity to the table than you otherwise would have brought originally. So almost like tapping into the power of equitizing your deal a bit more as opposed to leveraging your deal a bit more. But it's a very powerful thing to do. And it also sends a really positive message to the lender. I also think on the business, when you're presenting yourself, you really want to focus on the revenue backlog, the pipeline, and the TCV, the total contract value that your business has. You want to show revenue momentum. So if you have revenue momentum and you show that you've got 1 year's worth of revenue, 2 years worth of revenue, that you've expanded your backlog 50% over the past 6 months over the same time prior year, then you've shown that you're going to get through this economic uncertain period. And then I guess the other thing you want to do to make sure that your deal can close is you really want to test it. You want to stress test your projections and make sure that you can carry the debt service. And so doing all these things and kind of looking at them even before you start, am I doing the right kind of deal? Am I coming at it with the right amount of equity and the balance through the equitizing? And really focusing on the revenue momentum and then focusing on the ability to be in debt service equilibrium even when you stress. That's what gets you to the closing, and that's what gets you to a successful closing.
Well, there you have it. Thank you for watching our webinar, and we look forward to seeing you next time on the Attract Capital webinar series.
Take care.